Assalamualaikum, Miss Chika. My name is Azim Syahir, and this is my teammate Turgesh. We'll be, we'll be presenting our articles. So for the first article review, will be presented by me, Azim Syahir. The title of the article is Does Islamic Equity Investment Provide Diversification Benefit to Conventional Investors? Evidence from the Multivariate Gauge Analysis. The article is written by Burhan Saiti and Nazrul Hazizi Nordin, and published in the International Journal of Emerging Markets, Volume 13, Number 1, 2018. The paper uses the multivariate gauge DCC model to estimate the time-varying volatility and correlation of the index returns. The purpose of the article is to quantify the extent to which the Malaysia-based equity investors can benefit from diversifying their portfolio into the conventional and Islamic stock indices of the Southeast Asian region and the world's largest equity markets. So, Yin nak join. Okay. As for the problem is the question of whether the Malaysia-based equity investors can benefit from diversifying their portfolio into the conventional and Islamic stock indices of the Southeast Asian region and the world's largest equity markets. The article hypothesizes that the Islamic stock indices would provide more diversification benefits than their conventional counterparts, because of their ethical and financial screening criteria and their lower correlation with other markets. The key terms are efficient market hypothesis, modern portfolio theory, capital asset pricing model, CAPM, market integration, and portfolio diversification. So moving on for the literature review, the article cites relevant sources that support the theoretical foundation and empirical evidence of the study. The article covers the main theories and concepts related to market efficiency, portfolio selection, capital asset pricing, market integration, and portfolio diversification. The article also uses recent references. The article does not show any evidence of bias or favoritism. So, moving on to join design and procedures. As mentioned, the paper uses the multivariate gauge DCC model to estimate the time-varying volatility and correlation of the index returns. The paper also uses the T-distribution model to account for the fat-tail nature of the return distributions, econometrics. The paper uses the MSCI indices as proxies for the conventional and Islamic stock returns. The paper uses the MSCI indices dua kali. The paper uses the paper uses a two-step procedure to estimate the multivariate gauge DCC model. Step 1, the paper estimates the conditional variances of each individual equity index by using a univariate gauge model. In the second step, the paper estimates the time-varying conditional correlation between asset returns by using a DCC estimator. The paper also compares the paper then calculates and analyzes the DCCs between the MSCI Malaysia Index returns and other stock index returns to identify potential diversification benefits for the Malaysia equity investors. Okay, that's all for design and procedures. Moving on to data analysis. The paper uses quantitative data. The paper collected daily time series closing price data covering approximately 8 years, starting from June 29, 2007 to June 30th, 2016. As for the findings, volatility-wise, both Asian and international Islamic stock indices are more or less volatile than their conventional counterparts. Correlation-wise, both the conventional and Islamic MSCI indices of Japan provide more diversification benefits compared to the Southeast Asian region, China, Hong Kong, and India. In terms of portfolio diversification benefits, both conventional and Islamic Malaysia equity investors can benefit from diversifying their portfolio into Japan and USA markets. Both the conventional and Islamic MSCI indices of the USA provide more diversification benefits compared to the UK, Canada, France, Germany, and Switzerland. That's all for data analysis. So for the conclusion, let's conclude this article review. The article's conclusions are related to its original purpose. The affected parties include policymakers and regulators who are responsible for monitoring and managing the macroeconomic stability and the stock market development in Malaysia. Why does this feel different? Wait, yeah lah. Maybe I should change this.
Moving on.
Yeah lah. So that's all for the article 1 critical review. For the next article, I'll pass to Turgesh.
Good morning, Madam Chika. So I'll be presenting Article 2, a review which is macroeconomics determinants of Malaysia stock market. So this article is written by Aisha Abdul Rahman, Nur Zahira, Muhammad Sedek, and Fauzia Hanim Tafi. So this article was published in African Journal of Business Management. And this article uses a VAR framework to analyze relationship between selected macroeconomic variable and stock prices for the case of Malaysia. So the main purpose of this article is to examine a dynamic relationship between the stock prices and key macroeconomic factors in Malaysia. Yeah. It also identify a co-integrating link between the stock market index variables like money supply, interest rate, exchange rate, reserve, and industrial production. So the research underscore the market sensitivity highlights stronger interaction with reserve and industrial production. Next slide. So the problems stated in this article is the relationship between macroeconomic variables and stock market returns in Malaysia is not well understood and previously empirically proven by and especially in comparison with countries. Second, the measured stock market returns are shaped by distinctive macroeconomic factors, including a trade-led approach, rapid equity market development, a managed exchange rate, and a capital control. So these features create a unique economic and environment differentiating Malaysia's stocks market dynamic from those of other countries and influencing its performance as well. So the key terms in this article is stock market determinants, VAR, macroeconomic variables. Moving on. So, as for the literature review, this article cites relevant sources that support the theoretical foundation and empirical evidence of the study. And this article covers the discusses and theoretical framework based on the arbitrage pricing theory and the dividend discount model. So main findings and methodology of various studies that examine the relationship between stock market returns and macroeconomic factors such as interest rate, money supplies, inflation, exchange rate, and industrial production. And this article uses recent references, and the article does not show any evidence of bias or favoritism. Okay, as for design procedures, but this paper has already specified they have used vector autoregressive model to examine and study the interaction between selected macroeconomics variables and stock prices for the case of Malaysia. And also, this paper seem to use co-integration, random causality, variance decomposition, and impulse response function technique to trace out both short and long run dynamics. And the author focused on six variables, which is industrial production index as a proxy for domestic supply, real exchange rate, the money supply, reserve, and interest rate as well. And authors perform a variance decomposition analysis to examine the contribution of each variable to the focus error variance of other variables. Authors estimate impulse response functions to examine the response of each variable to shock in other variables. Authors conducted some complementary tests such as lag exclusion test, linear restriction test, custom text to ensure the validity and stability of the results. Yeah. Okay, as for the data analysis and presentation, this paper usually use quantitative data approach. Data collected was monthly data from 1986 to 2008 for six variables from Kuala Lumpur Composite Index. And the result of the unit test, which shows that all variables are integrated of order one. So for a co-integration test, we show there is no co-integration relationship between the variables. And the result for the granular causality test, we show the causal relationship between the variables. And Malaysian stock market index shows a co-integrated relationship with money supply, interest rate, exchange rate reserve, and industrial production index, indicating they move together in the long term. Notably, the reserve and industrial production have a stronger dynamic interaction as well, exerting a larger impact on the stock market compared to the other drivers. On for the last slide.
This,
So the articles,
this part we flipped. So this was originally my part. Your part, actually, this part.
yeah, yeah, this is my part. Uh, so the article's conclusion are related to its original purpose, and these articles these articles benefit for policymakers and regulators who are responsible for monitoring and managing the macroeconomic stability and stock market development in Malaysia, and also for investors and practitioners who are involved in the stock market activities and need to anticipate and respond to the market fluctuation as well. That's all from me. Thank you.
So from us, we'll move on to the Q&A session. So please, anyone, if you have any questions, don't be shy to ask. Please, if you want more marks, anything.
Okay, I will ask you a question. I have a question.
So the first article or second article?
All right. The first article about the Islamic equity investment.
Okay.
All right. Okay, based on what you have read from the article, right? Are there any regionals or graphical differences in the diversification benefits between Islamics and conventional equity investments? It's like, are there any like regional or geography differences?
Already. Least. So to guess, you have to answer. Yes, this is my article. You have to answer on my behalf.
Sorry, can you repeat the question again? Sorry.
He asked if are there any regional differences between the different regions lah, in terms of Islamic and conventional. So the answers are right there actually, volatility wise, correlation wise.
Actually, there's no any differences. The this is a volatility wise, which both Asian and international Islamic stock prices believed to be more or less volatile than their conventional counterparts as well.
To focus on the
And yeah, and for the correlation part, it's believed that both the conventional and Islamic provide more diversification benefits compared to the Southeast Asia region, China, Hong Kong, and India as well. So, in conclusion, that both conventional and Islamic Malaysia, in terms of portfolio diversification, uh, both for both parties, investors can benefit from diversifying their portfolio to uh, countries like Japan and USA market.
did that answer your question, Yin?
Okay.
Okay. As for the second article, does anyone have any questions? The economic one, macroeconomic. Yes, I want to answer. Aduh, udah lebih dari 12 menit. Anyone? Can go. Yeah, I think that's it. Azwa, Awang, do you have any questions about this article?
Okay, so basically, what is the limitation that you think that this research has?
Limitation. Quick research. Where is so when you say limitation, I also assume you mean weaknesses. The research paper does not explicitly discuss the weaknesses and problems of the study. However, some possible limitations can be inferred from the paper's methodology and findings. For example, the key terms though, stock market determinants, VAR, macroeconomic variables. The paper uses a VAR framework, which assumes that the variables are exogenous and that the error terms are normally distributed and uncorrelated. These assumptions may not hold in reality and may affect the validity of the results. The paper also uses monthly data from January 1986 to March 2008. However, the paper does not account for structural breaks or regime changes that may have occurred during these periods and may have influenced the interaction between macroeconomic variables and stock prices. I think only two are enough for your question. Is there enough, Mr. Azwa?
That was such a great explanation. Thank you.
No problem, no problem. Okay, I think that's all from us. Thank you for joining our talk.
Thank you, guys.
Thank you, Miss Chika. I will stop my recording right now.